1 US dollar costs you almost 97 rupees. That is the most expensive the dollar has ever been for an Indian. A year ago, it was 85. That is an 11% fall in 12 months. And if you think that this is just a number that business owners care about, let me show you exactly how it is already affecting you. Let me start with the absolute basics. A currency is just a price tag. It tells you how much your money is worth compared to someone else's money. When we say the rupee is at 97 to the dollar, we are saying to buy $1, an Indian has to give up around 97 rupees. When that number goes up from 85 to 97, it means the rupee is getting weaker. You need more rupees to buy the same dollar. Your money has less purchasing power in the global market. Think of it like this. Imagine you go to a shop where everything is priced in dollars. Last year, a $100 item cost you around 8,500 rupees. Today, the same item costs 9,700. Nothing changed about what you purchased the item, only the amount you paid did. And that went up by 1,200 rupees. Now, why the dollar? Why not the euro, the yen or the won? 3 reasons. 1. Oil. The world's most important commodity, crude oil, is bought and sold in dollars. You've heard this now a bunch of times that India imports 85% of its oil. Every single barrel we buy, we pay in dollars. That alone makes the dollar the most important foreign currency for India. Number 2, trade. About 88% of all global foreign exchange transactions involve dollar on one side. When a company in India buys chips from Taiwan or machinery from Germany or chemicals from Saudi Arabia, the invoice is almost always in dollars. 3. Debt. When countries or companies borrow from international markets, those loans are usually denominated in dollars. When India's government or Indian companies raise money abroad, they promise to pay back in dollars. So the dollar is not just America's currency, it is the world's operating system. And when the rupee weakens against it, everything that India buys from the world becomes more expensive. Now let's bring this closer to home. What does 97 actually mean for your daily life? Petrol and diesel. Oil is priced in dollars and a weaker rupee means we pay more for the same barrel. That is exactly why the prices of petrol and diesel went up last week. Food. When fuel gets expensive, everything that moves on trucks gets expensive. Vegetables, milk, cooking oil, all of it travel on diesel. The wholesale price index that tracks how much the cost of goods sold in bulk is changing over time before they reach shops, and it's pretty much mainly used to track inflation, has just crossed 8%. That is the highest in over 2 years. Medicines. India manufactures a lot of medicines, but many key ingredients are still imported. So when the rupee falls, those inputs become costlier in rupees. Over time, some of that shows up in what you end up paying at your chemist, your phone, your laptop. India still imports a massive amount of electronics and components. Apple does not price the iPhone in rupees. It prices it in dollars. When the rupee falls 10%, that costs get passed on to you, either directly or through a price hike, or indirectly through thinner margins for the company. Education abroad. If you are saving to send your child to the US or UK for a master's degree or otherwise, your corpus just shrank. A year ago, a $100,000 degree cost you 85 lakhs. Today, that same degree costs you around 97 lakhs. You did not spend a single rupee, but you now need 11 lakh more for that same degree. EMIs on foreign currency loans. If you or your company has borrowed in dollars, your repayment just got more expensive in rupee terms. Let us take a step back for a moment. Why has the rupee slipped so much, and that too so quickly? There are really two sets of forces. Some are coming from outside India and some are coming from inside. First, the outside push. Oil is more expensive and the dollar itself is stronger. The Brent crude has moved into 3-digit territory. For a country that imports most of its oil, that alone means that many more dollars are going out every day. At the same time, global money has been flowing back to the US into AI stocks, chip companies and American bonds that now pay a higher interest. When the dollar gets stronger like this, most currencies weaken. The rupee is part of that crowd, just a bit closer to the back of the line. Second, our own demand for dollars. We still buy a lot of things from abroad. When oil is high and the rupee is weak, that import bill balloons. Add to this the fact that foreign investors have sold Indian shares and bonds this year and taken that money back home. Every time they exit, they sell rupees, buy dollars, and send those dollars out. That is a lot of demand for dollars, all happening at once. Third, the worry factor. The war in West Asia and tensions around key shipping routes have made markets jumpy. When that is the kind of uncertainty that investors see, they prefer safe assets in dollars instead of riskier bets in emerging markets. India is not being singled out, but we do feel more of the impact because we run a trade deficit and depend on foreign capital. And there is one more layer. Across Asia, several currencies have been under pressure. The yen, the won, the baht, the ringgit, all have had their bad months. But in recent market surveys, traders are actually long or neutral on many of them, while the rupee shows up as one of the most shorted currencies in the region. Now, a falling rupee does not hurt everyone equally. For some companies, it's actually a tailwind. So who benefits? Pharma exporters. Companies like Sun Pharma, Cipla, Dr. Reddy's, they earn a large portion of their revenue in dollars, selling generic medicines to the US and Europe. When the rupee falls, those same dollars convert into more rupees in their books. The Nifty Pharma Index is up 15% between April and May alone. It has outperformed every other sector. Auto ancillary companies that export components, specialty chemical manufacturers selling to global clients, metal exporters, anyone who earns in dollars and spends in rupee is having a good quarter. Who gets hurt? Airlines, because fuel, aircraft leases and maintenance are all dollar denominated. Oil marketing companies because they buy crude in dollars. Real estate because imported materials like steel and fixtures get costlier. And surprisingly, IT, which historically has benefited from a weak rupee, is struggling this time because global clients are cutting tech budgets and AI is disrupting traditional outsourcing demand. The rupee at 97 is not the end of the world. In a recent piece titled, "Let the Rupee Do Its Work," Geeta Gopinath makes exactly this point. A falling rupee is one way an open economy adjusts when oil is expensive and dollars are leaving. A weaker rupee makes imports costlier and exports more attractive. People naturally cut back on some foreign spending when it pinches. There is another view as well. Some economists call this the rupee trap. They point out that this is not just about one shock. The rupee has a habit of drifting down almost every year, 3, 4, 5%, and then falling faster during crisis time. Over time, that slow leak acts like a quiet tax on savers, especially families who keep most of their wealth in plain rupee. But both things can be true. In the short term, the rupee is doing some of the adjustments so that the government does not have to ban everything or burn through all the reserves. In the long term, if we keep relying only on a weaker rupee instead of fixing productivity, logistics, trade, the cost of that choice shows up in your savings. Here is what you should understand. The rupee has hit a new record low every single month from January to May this year. That is not a one-day story. And if oil stays above $100, if foreign investors keep leaving, if the war does not escalate further, analysts are already asking whether we see 100 rupees to the dollar before the year ends. So what can you do? First, understand that a weak rupee makes everything imported more expensive. Slowly, over time, but definitely more expensive. Second, if you have the ability to earn in dollars through freelancing, exports or international clients, that is now worth about 11% more than it was a year ago. Third, look at your portfolio. Companies that are earning dollar revenues and rupee costs are structurally positioned for this environment. The rupee at 97 is a message. India's economy is under pressure from forces we do not fully control. How we respond to that pressure will define the next decade. I'm Yashodhara and you are watching DeKoder. If this helped you make sense of what's happening, do share it with someone who needs to hear it and subscribe for more clear, no-nonsense explainers.